On this budget special is Matthew Hall, partner with Wilkins Kennedy Chartered Accountants and Business Advisors, who's going to be helping us talk through what the actual budget means to you and to your business as well. Will it have a big impact? Are there things that have happened last Wednesday that you should be aware of, or have things already been happening and it's just really a bit of a catch-up?
I mean, there's no two ways about it. There are still some people that use their accountant for the once a year, this is the compliance we must do. But for a lot of business working more strategic, looking at their tax structuring and things like that, and for those clients I'll be with them on a very regular basis. But I think probably what's focused attention is availability of finance and the fact that people are actually, or businesses of all sizes, particularly small businesses, very much more conscious of cash flow and the likes. And when a lot of businesses are operating on reduced margins, lower margins than they would have been years ago. But for mistakes with tax returns, be it VAT returns, be it pay as you earn, be it the annual tax return, the revenue now are very much into penalties for careless behaviour and things like that. And you can end up with penalties quite easily for what a quite simple mistake. I mean, when I started, you got one understood: evasion illegal, avoidance fine, that's legal. Where are we? What actually happened was this market started with what are now being termed as aggressive avoidance schemes, and that's been a market which has been around for a long time. But it's probably fair to say that late 90s, early 2000s, and indeed right up to maybe 4 or 5 years ago, it was a market that was growing and growing, and more people were being drawn into this. So technically, the avoidance schemes were legal. We've obviously, there have been various high-profile people who have been named as taking part in these schemes. But the way in which those schemes are sort of set up is that you've got a small number of advisors who are looking for the loopholes in the legislation. What I'm actually more concerned about is the fact that as the waters get muddied, what I call the sensible planning, starting with the client, that starts to get eroded, because suddenly there's momentum shifting against this whole unacceptable tax avoidance. In terms of the revenue, I think the thing that we need to get is more consistency from the revenue. And there's no question about the fact that with an election around the corner, it was always going to affect the budget. So in terms of announcements that we had on Wednesday, reasonably few, to be honest with you. Obviously, the Chancellor stood up and told us that the economy's going great guns, employment is up, growth, I think one of the fastest growing major economies, and so I think we've got a bit of a ditty there, just comparing the growth in the UK to other major economies. And one of the major tax reliefs at the moment is research and development. You get an uplift on your expenditure. For small and medium-sized businesses, for every £1 you spend, you get tax relief on £2.30. I mean, this is an excellent route for getting funding into business. So it's tax relief for investors who are investing into trading businesses. Of course, one of the markets which really has grown is peer-to-peer lending, and it's pretty fair to say that it doesn't have a tax regime. The idea is that it's going to be automatically populated with details of your other income from other sources, that you can make payments on account. One of my colleagues was talking on this, saying she doesn't quite know why people would want to pay their tax earlier. Excellent. Good afternoon, I'm Matthew Hall, Head of Tax at Wilkins Kennedy. I've been speaking about the budget, and the key takeaways from that is probably that there was actually little in it for business measures. But do look at investment into plant and equipment. The annual investment allowance, that's going to drop at the end of the year, so you might need to accelerate investment there. For those of you who are either looking at raising finance or looking to invest in business, think about Enterprise Investment Scheme. There's some excellent tax reliefs there. Perhaps not used as much as it should be, but it's an excellent regime, and I would certainly advise all businesses to look at that. And the third one is my cheat. It's a point that I hadn't mentioned so far, and it's that the pension regime is changing after the year end, making it easier to access pension schemes. Now the government is expecting to pick up a lot of money through this, so they're obviously expecting a lot of people to start accessing their pension funds, and it is a way of unlocking capital which perhaps could be invested into businesses. So I'll certainly look at that. And the final one really goes back from the earlier conversation, is that do use your accountant and your tax advisor. They really should have a lot of information, a lot of advice that they can give you in terms of reducing overall tax liability and also raising finance. So that's me, Matthew Hall, Head of Tax at Wilkins Kennedy.